Pedro, please go ahead. Can you share with us this analysis that you carried out to this full note summary of notes for financial states of SMEs that will come in the next years? Yes, of course. Can you hear me well? Can you confirm, Sergio? Yes, we can hear you strong and clear. This model 31 refers to a book that has just been published last year and that I have just sent to Mauricio. So it is shared with all the attendees so you know and are informed about this because it is related to notes as of the pandemic that started in 2020 last year. It is really important to have an application base and guideline for this purpose. Next, please. This is a note model which is targeted to a limited company, limited responsibility company. The book has in total 17 notes. It is 480 pages, this book, but I am going to make a summary of the most important notes so all of us are informed to this respect. I took some specific notes like significant notes to financial statements. As Juan Carlos mentioned yesterday, they are really very important because they are the complement or interpretation of some particular matters of financial statements, and users require them in order to understand in a more analyzed manner. So what we are going to share with you next, please, we're looking at these 17 notes, which is going to be about trading, accounts receivables, cash and equivalents, risk and uncertainty management, significant accounting policies, etc. In total, there are 17 notes in the book. They are explained even with some examples so we can have the chance to grasp its meaning. Note number 2 has an important part. Note 2 because it specifically is related to significant accounting policies. This, as many of the notes, says that there should be compliance of financial statements regarding regulations. A particular case in this situation is for SMEs, and this is issued by IASB. IASB. It is important to see which type of costs. This is historical cost, and it's been modified by a revaluation of some specific assets like properties, plant, and equipment. Later on, we can see that there are some main policies adopted. by the entity in order to prepare financial statements. In this particular case, it is related to non-consolidated financial statements. Therefore, it is important to mention this in the text of the notes. Next, please. As you can see, in this part, we can see the preparation basis of financial statements, because we need to point out that they need to be referenced to, so we can note that they are being prepared always by a going concern company. There have been particular situations that have stopped this going concern, and we need to point out these particular situations that have affected them, mainly because we know that due to COVID-19 there was a disruption, a sudden stoppage of activities, and it has even reached to the situation that some companies have had to minimize their activities or practically closing them. In this case, we need to point out this particular situation. Please, next slide. We need to consider here that in the particular case, if there's any intention of a settlement of the company, we need to point out that. Why? Because we need to take into consideration all events regarding new waves of the pandemic and everything that has happened after the pandemic started. Therefore, we need to take into consideration that financial statements are present in order to observe how this has affected going concern businesses. Therefore, we need to observe if there is any material uncertainty to see whether we can continue as a going concern. So, shareholders can make their relevant decisions to this respect. The accounting base, as we can see, also needs to be explained. Some measures that the jurisdictional government has undertaken, because as it is affecting the business operation, it is important to see whether there are some subsidiaries. Also, we need to see how revenue has been affected. Then we need to see, because there are some companies that have made some alternatives and they have turned to online sales, and all these needs to be mentioned. We need to see the relevant part on financial statements notes. If there's any loss in the exercise, we need to point it out in order to reflect it in future periods, in order to preview and foresee all these particular scenario. Next, please. The accounting base of current company. Sorry, it is the previous slide. Thank you. Thank you very much. We need to take into account the liquidity of the company consider uncertainties regarding the pandemic, new waves. If there is any negative scenario, we need to see the relevant part for this situation. And as it is mentioned, it is pointing out the particular situation of the LTDA, and we need to mention which are the financing options that are relevant for this purpose. So yes, we need to take into consideration these particular situations in order to see whether it continues as a going concern company or not. Let's continue, please. Among the significant accounting policies, the accounting base of operating company, if there's any material uncertainty, where there's any doubt whether the company will continue or not, then we need to see if they need to sell their assets in order to settle their liabilities, because maybe if we need to pay some liabilities, we need to undertake the proper measures. On the other hand, we have something interesting about accounting policies like the functional and presentation currency, because it depends. If they are operating with one of the currencies, probably financial statement presentation should be presented in a different currency, and we need to point it out. On the other hand, another policy is to recognize revenue of ordinary activities, because we're talking about goods revenue. So we need to point it out, because probably there are some particular conditions to consider for this purpose. Next, please. It also mentions information responsibility and estimates as an additional policy. It reads that we need to establish some assumptions regarding this economic activity, because we need to appraise and present some important items of financial statements. Therefore, the company administration needs to issue its opinion. So probably we need to defer some fiscal effects of some particular accounts, and we need to consider references to estimates in order to review them, and they are acknowledged at a different period. Next, please. We need to consider also information and estimates that are relevant, because there's a very special risk to adjust all the books regarding liabilities and assets due to the impact that they are suffering. We just have 5 additional minutes, sorry. Perfect. I will finish with note 2, and I think that up to there, this is a lot of information. My apologies. Anyway, we're going to hand out all this material to our attendees. In the case of current balances and non-current balances, it mentions the classification for the purposes of short and long term, and the same happens with liabilities accounts. We need to consider cash and cash equivalents, because probably there are some non-restricted deposits and some others yes. And we also need to consider the situation of our customers. Probably there are some of them that had some delays in their payments, and we need to consider which are going to be recoverable and which not, so we can make our duly estimates. Next, please. Also, in the particular case of financial assets, as I said, mainly in receivable documents, we need to see how this impacts cash flows at the short and midterm range, to take that into consideration. If there are some related companies, the same is going to happen with them. Next, and also investments up to maturity, they need to be valued with an amortized cost, so they have a reasonable presentation in financial statements. And as I said, we need to consider also bad accounts based on the impact of the company. Another thing which also comes into the policies is stock or inventories valuation or appraisal. We need to consider also whether there are some in-transit imports and consider the correction of obsolescence of inventories. And we need to see also inventory turnover and also assurance of these inventories. Probably these goods have not been taken care of properly, and we need to see obsolescence, and we need to see what's the impact of COVID-19 over all of them. In the case of properties, plant, and equipment, it is also within accounting policies, and we need to see the purchasing cost, particular situations. There's a particular note that talks about this. As you can see in this table, it details how their useful life is estimated. As the company has been operating in some time, we need to see these current assets in order to see their behavior. Probably there are some pieces of equipment or machineries that need to be reactivated. Those are the important details that we can see here. There's also a deterioration in non-financial assets to estimate recoverable cost, and due to lack of time, we can continue. There's also losses due to deterioration of non-financial assets that could also happen. And we have also accounts payable, commercial, and others that we also need to consider. This is specifically to liabilities, and also taxes, which is also another problem related to the pandemic, because we need to see whether we have profits or losses, to consider this as a specific point. Yes, we need to take into consideration provisions also in liabilities, employee benefits. We need to consider also provisions and some accruals as well. Also ordinary activities, dividends, interests, and here we are getting into P&L, and also operation expenses that need to be considered regarding some situations, and to see what's the basis of accrued and how we have the compensation of balances and transactions, and how we have cash flow situation to see whether we can reply to the short or long term. So yes, it is important to take into consideration that we have some estimates and some critical things that we need to consider to this respect. Here we can see another note, and I don't want to exceed my time to take time of my next colleague.